The Zimbabwean dollar was the official currency of Zimbabwe from 1980 to April 12, 2009, with 3 periods of inflation. Although the dollar was considered to be among the highest valued currency units when it was introduced in 1980 to replace the Rhodesian dollar at par, political turmoil and hyperinflation rapidly eroded the value of the Zimbabwe dollar to become one of the least valued currency units in the world, undergoing 3 redenominations, with high face value paper denominations, including a $100 trillion banknote. The third redenomination produced the fourth dollar, which was worth 1 trillion ZWR, or 1,025 Zimbabwean dollars. Despite attempts to control inflation by legislation, and 3 redenominations, use of the Zimbabwean dollar as an official currency was effectively abandoned on April 12, 2009 due to the skyrocketing inflation. According to some sources, a person would starve on just $1 billion Zimbabwe dollars. This was a result of the Reserve Bank of Zimbabwe legalizing use of foreign currencies for transactions in January 2009. Currencies such as the South African rand, Botswana pula, pound sterling, Indian rupee, euro, yuan and the United States dollar are now used for all transactions in Zimbabwe. The policy of the government of Zimbabwe has insisted that any attempts to reintroduce Zimbabwean currency should be considered only if industrial output improves. History: the Zimbabwean dollar's predecessor, the Rhodesian dollar, was essentially equal to half of a pound sterling when it was adopted during the decimalization of 1970, the same practice which was used in other Commonwealth countries such as South Africa, Australia, and New Zealand. The selection of the name was motivated by the fact that the reduced value of the new unit correlated more closely to the value of the US dollar than it did to the pound sterling. Design: the main illustration on the obverse of banknotes issued from 1987 was the Karemba balancing rocks in Epworth, Harare. The rocks were used as a metaphorical theme to explain the importance of development coupled with preserving the fragile environment. The rocks were part of the Reserve Bank's emblem, which was used for all bearer and aggro checks, which circulated between 15 September 2003 and 31 December 2008. The reverse of dollar notes often illustrated the culture or landmarks of Zimbabwe. Introduction of the first dollar: the first Zimbabwean dollar was introduced in 1980 and replaced the Rhodesian dollar at par. The initial ISO 4217 code was ZWD. At the time of its introduction, the Zimbabwean dollar was worth more than the US dollar in the official exchange market, with 1 Zimbabwean dollar equals $1.47. However, this value did not reflect reality. As a result, the currency's value, both in the official and parallel markets, eroded rapidly over the years. On July 26, 2006, the parallel market value of the Zimbabwean dollar fell to 100 Zimbabwean dollars equals GBP 1. First redenomination: introduction of the second dollar. In October 2005, the head of the Reserve Bank of Zimbabwe, Dr. Gideon Gono, announced, Zimbabwe will have a new currency next year. New banknotes and coins were to replace the then current Zimbabwean dollar. Gono did not provide a name for this new currency. In June 2006, Deputy Finance Minister David Kapiga stated that Zimbabwe had to achieve macroeconomic stability before any new currency was introduced. On August 1, 2006, the first dollar was redenominated to the second dollar at the rate of 1 revalued second dollar equals 1,000 old first dollars. The new dollar was subdivided into 100 cents, although cents were not used in practice. Together with the redenomination, the government devalued the dollar by 60% against the US dollar, from 101,000 old dollars to 250 revalued dollars. ISO originally assigned a new currency code of ZWN to this redenominated currency, but the Reserve Bank of Zimbabwe could not deal with the currency change, so the currency code remained ZWD. The revaluation campaign, which Gideon Gono named Operation Sunrise, was completed on August 21, 2006. It was estimated that some 10 trillion old Zimbabwe dollars were not redeemed during this period. On December 12, 2006, Gono hinted in a memorandum to banks and other financial institutions that he would lay out the next phase of his monetary reforms, dubbed Project Sunrise 2, when he announced the Monetary Policy Review Statement in January 2007. It was not possible to get immediate confirmation from Gonno's office whether the memorandum was advice to banks that he would be launching the new currency in January. Even so, the chief executive officer of one of the country's largest banks said industry players had understood the governor's memo to mean new money would be introduced the next month. A possible name appeared to be Avu, which means soil and Shona. The following year, on February 2, 2007, the RBZ revealed that a new dollar would be released soon and gave some details of the new banknotes. However, with inflation at the time still in the 4 digits, the banknotes remained in storage. During the same month, the Reserve Bank of Zimbabwe declared inflation illegal, outlawing any raise in prices on certain commodities between March 1 and June 30, 2007. Officials arrested executives of some Zimbabwean companies for increasing prices on their products. Economists consider such measures ineffective at eliminating the problem of high inflation, since high sustained inflation is a symptom of high, sustained growth in the money supply. On June 15, 2007, economist Eddie Cross reported, "There is talk that the Reserve Bank will cut another 3 zeros off our currency next week, and this would mean that one Zimbabwe dollar would now equal 1 million of the old dollars." Chaos reigns in commerce and industry, and those in the public sector are frantic. On September 6, 2007, the Zimbabwe dollar was devalued again, this time by 92%, to give an official exchange rate of ZW $30,000 to $1, although the black market exchange rate was estimated to be ZW $600,000 to $1. Meanwhile, the WM Reuters company introduced a notional exchange rate which more accurately reflected black market exchange rates. Due to a shortage of foreign exchange in the country, the official rate was nearly impossible to obtain. The method of calculation was based on purchasing power parity utilizing the dual listing of companies on the Harare and London stock exchanges. In particular, the Old Mutual implied rate was calculated by dividing the Zimbabwe Stock Exchange price of shares of the insurance company named Old Mutual by the London Stock Exchange price for the same share. Second redenomination, introduction of the third dollar. Reserve Bank Governor Gideon Gonno announced on July 30, 2008 that the Zimbabwean dollar would be redenominated. Effective August 1, 2008, ZW $10 billion would be worth ZW $1. The new currency code was ZWR. The planned denominations to be issued are coins valued 5 Zimbabwean dollars, 10 Zimbabwean dollars and 25 Zimbabwean dollars, and banknotes worth 5 Zimbabwean dollars, 10 Zimbabwean dollars, 20 Zimbabwean dollars, 100 Zimbabwean dollars and 500 Zimbabwean dollars. While the German firm of Geiser and Devrient was no longer printing Zimbabwean currency, the Daily Telegraph reported that the new currency was printed before the relationship was severed and had been kept in storage since then. Due to frequent cash shortages and the worthless Zimbabwean dollar, foreign currency was effectively legalized as a de facto currency on September 13, 2008 via a special program to officially license a number of retailers to accept foreign money. This reflected the reality of the dollarization of the economy, with many shopkeepers refusing to accept Zimbabwe dollars and requesting US dollars or South African rand instead. Despite redenomination, the RBZ was forced to print banknotes of ever higher values to keep up with surging inflation, with 10 zeros reappearing by the end of 2008. Third redenomination, introduction of the fourth dollar. On February 2, 2009, the RBZ announced that a further 12 zeros were to be taken off the currency, with 1 trillion Zimbabwe dollars being exchanged for one new dollar. New banknotes were introduced with a face value of 1 Zimbabwean dollar, 5 Zimbabwean dollars, 10 Zimbabwean dollars, 20 Zimbabwean dollars, 50 Zimbabwean dollars, 100 Zimbabwean dollars and 500 Zimbabwean dollars. The banknotes of the fourth dollar circulated alongside the third dollar, which had to remain legal tender until June 30, 2009. The new currency code was ZWL. By the end of 2009 the Zimbabwean dollar was reported to have become largely irrelevant, with the economy by then being almost completely dollarized. Even the National Postal Service, ZimPost, was said to be charging customers postage in US dollars, even though some of the stamps were in Zimbabwean dollar denomination. Zimbabwe Finance Minister, Tendai Biti, said in his first budget report, "The death of the Zimbabwe dollar is a reality we have to live with." Since October 2008 our national currency has become moribund. In late January 2009, Acting Finance Minister Patrick Chinamasa announced that all Zimbabweans would be allowed to conduct business in any currency as a response to the hyperinflation crisis. On April 12, 2009, media outlets reported that Economic Planning Minister Elton Manjima had announced the suspension of the local currency for at least a year, effectively terminating the fourth dollar. Inflation. Rampant inflation and the collapse of the economy severely devalued the currency, with many organizations using the United States dollar, the euro, the pound sterling, the South African rand, or the Botswana pula instead. Early in the 21st century, Zimbabwe started to experience hyperinflation. Inflation reached 623% in January 2004, then fell back to low triple digits in 2004 before surging to 1,281.1% in 2006. Inflation reached another record high of 37.14% in April 2007. The monthly rate for April 2007 exceeded 100%, implying that inflation may soon exceed all forecasts, as 100% monthly inflation over sustained 12 months would produce annual inflation of over 400,000%. Mid-year inflation for 2007 has been breaching records as inflation for May 2007 was estimated at 4,530%. On June 21, 2007, the United States Ambassador to Zimbabwe, Christopher Dell, told the Guardian newspaper that inflation could reach 1.5 million% by the end of the year. The unofficial inflation rate at the time was above 11,000%, and the black market exchange rate was 400,000 Zimbabwean dollars to the pound. On July 13, 2007, the Zimbabwean government said it had temporarily stopped publishing inflation figures, a move that observers said was meant to draw attention away from runaway inflation which has come to symbolize the country's unprecedented economic meltdown. On July 27, 2007, the Consumer Council of Zimbabwe said its recent calculations for the monthly expenditure for an urban family of 6 showed that inflation for the month of June was more than 13,000%. The Central Statistical Office, the official source of consumer price index numbers, had not released its figures since February when it reported annual inflation at 1,729%. In September 2007, the Central Statistical Office announced an official inflation rate of 6,592.8% for August 2007. Private estimates were as high as 20,000%. In October 2007, they announced an official inflation rate of 7,892.1% for September 2007. In November 2007, they announced an official inflation rate of 14,840.5% for October 2007. Hyperinflation. On November 27, 2007, the chief statistician of the Central Statistical Office, Moffat Yoni, announced that it would be impossible to calculate the inflation rate of the dollar any further. This was due to the lack of availability of basic goods, and subsequent lack of information from which to calculate the inflation rate. The International Monetary Fund stated that inflation was predicted to rise to 100,000% per annum. On February 14, 2008, the Central Statistical Office announced that the inflation rate for December 2007 was 66,212.3%, and the unofficial exchange rate was 7.1 million Zimbabwean dollars to the $1 US. On February 20, 2008, the Central Statistical Office said that officially, inflation has in January 2008 gone past the 100,000% mark to 100,580.2%. On April 4, 2008, the Financial Gazette reported that officially, inflation in February 2008 jumped to 164,900.3%. On May 15, 2008, the Zimbabwe Independent reported that officially, Inflation in March 2008 jumped to 355,000%. On May 21, 2008, SW Radio Africa reported that, according to an independent financial assessment, inflation in May 2008 jumped to 1,063,572.6%. The state's statistical service has said there are not enough goods in the shortage-stricken shops to calculate any new figures. On June 26, 2008, the Zimbabwe Independent reported that, latest figures from the Central Statistical Offices showed that annual inflation rose by 7,336,000 percentage points to 9,030,000% by June 20 and was set to end the month at well above 10,500,000%. The Sydney Morning Herald reported that inflation was likely to be 2 million % in May 2008 and €15 million in June 2008, according to John Robertson, a respected Zimbabwean economist. Robertson estimated inflation in July 2008 to be €50 million %. Inflation can only be estimated because of the impossibility of following the cost of individual goods. According to Central Statistical Office statistics, annual inflation rate rose to 231 million % in July 2008. The month-on-month rate rose to 2,600.2%. As predicted by the quantity theory of money, this hyperinflation has been caused primarily by the Reserve Bank of Zimbabwe's choice to mushroom the money supply. Since February 2009, following a period of hyperinflation and widespread rejection of the devalued currency, companies and individuals are permitted to transact domestic business in other currencies, such as the US dollar or the South African rand. In consequence, the Zimbabwean economy has undergone dollarization and the Zimbabwean dollar has fallen out of everyday use. Money supply. On February 16, 2006, the governor of the Reserve Bank of Zimbabwe, Gideon Gono, announced that the government had printed ZW $20.5 trillion in order to buy foreign currency to pay off IMF arrears. In early May 2006, Zimbabwe's government announced that they would produce another ZW $60 trillion. The additional currency was required to finance the recent 300% salary increase for soldiers and policemen and 200% increase for other civil servants. The money was not budgeted for the current fiscal year, and the government did not say where it would come from. On May 29, Reserve Bank officials told IRIN that plans to print about ZW $60 trillion were briefly delayed after the government failed to secure foreign currency to buy ink and special paper for printing money. In late August 2006, it was reported that about ZW $10 trillion old dollars had not been exchanged for revalued dollars. These bearer checks were demonetized. On June 27, 2007, it was announced that Central Bank Governor Gideon Gono had been ordered by President Robert Mugabe to print an additional 1 trillion Zimbabwean dollars to cater for civil servants and soldiers' salaries that were hiked by 600% and 900% respectively. On July 28, 2007, it was reported that Mugabe said that Zimbabwe would go on printing money if there was not enough for underfunded municipal projects. On August 30, 2007, it was reported that an additional ZW $3 trillion had been printed to pay for 500,000 Scotch carts and 800,000 ox-drawn plows plus an unspecified number of cattle. On September 3, 2007, it was reported that the black market in Zimbabwe is once again booming despite price controls. People who previously were employed for $11 a month are now able to turn as much as $166 just through black market trading. On November 24, 2007, it was reported that money supply was now $58 trillion revalued Zimbabwean dollars. However, Zimbabwe banks could only account for one Zimbabwean dollar €2 trillion of those dollars, meaning that members of the public were holding 56 Zimbabwean dollars €57 trillion in cash. On January 4, 2008, it was reported that money supply had been increased by 33 trillion Zimbabwean dollars to 100 trillion Zimbabwean dollars revalued Zimbabwean dollars. Further, the demonetization of the 200,000 Zimbabwean dollars bearer checks was put on hold, thus increasing the money supply. The planned issue of additional banknotes on January 18, 2008 will increase the money supply by an unknown amount. On January 21, 2008, it was reported, by Gideon Gono, that the money supply had been increased to 170 trillion Zimbabwean dollars since the middle of December. Further, Gono expected it to reach $800 trillion by January 28, 2008. On March 1, 2008, it was reported that documents obtained by the Sunday Times show the Munich company Geisseke & Devrient was receiving more than $500,000 a week for delivering banknotes equivalent to 170 trillion Zimbabwean dollars a week. According to a source at the Reserve Bank of Zimbabwe, G&D was delivering 432,000 sheets of banknotes every week to Fidelity printers in Harare, where they were stamped with a denomination. Each sheet contains 40 notes and the current production is entirely in 10 million Zimbabwean dollars notes. On July 1, 2008, Geisseke & Devrient responded to pressure from the German government by suspending production of banknotes for Zimbabwe. In The Guardian, on July 18, 2008, a report on Zimbabwe's inflation said that an egg costs 50 billion Zimbabwean dollars, and it showed adverts for prizes of 100 trillion Zimbabwean dollars in a Zimbabwean derby and 1.2 Zimbabwean dollar quadrillion in a lottery. It also showed a monthly war pension currently as 109 billion Zimbabwean dollars. Shops can only cash checks if the customer writes double the amount, because the cost will go up by the time the check has cleared, and people can only withdraw a maximum of 100 billion Zimbabwean dollars from cash points. On July 23, 2008, an Austro-Hungarian company based in Vienna confirmed that it is providing the Reserve Bank of Zimbabwe with the licenses and software required to design and print Zimbabwe currency. The company, named Jura JSP, said it would consider ending its supply of licenses and software if the European Union required it to do so. Without the licenses and software, the Reserve Bank of Zimbabwe may be unable to print notes in larger denominations than are already in circulation. On July 24, 2008, the Reserve Bank of Zimbabwe announced that appropriate measures are being put in place to address the current setbacks being faced on the currency front, as well as on financial and accounting systems. It promised that in the next few days it would institute changes to the minimum cash withdrawal limits and IT systems constraints. Currently, the government limits cash withdrawals to $100 billion per day, which is less than the cost of a loaf of bread. IT systems cannot handle such large numbers. The automated teller machines for one major bank give a data overflow error, and freeze customers' attempt to withdraw money with so many zeros. That same day, the Institute of Commercial Management reported that $1.2 trillion is worth the same as £1. From January to December 2008, the money supply growth rose from 81,143% to 658 billion%. Abandonment, the use of foreign currencies was legalized in January 2009, causing general consumer prices to stabilize again after years of hyperinflation and price speculation. The move led to a sharp drop in the usage of the Zimbabwean dollar, as hyperinflation rendered even the highest denominations worthless. On February 2, 2009, the Zimbabwean dollar was redenominated once more, at the ratio of 1/AO0000000000ZWR to 1 ZWL. The third dollar was expected to be demonetized on July 1, 2009, but the complete abandonment of local currency was hastened by the decline in overall consumer usage of local currency in favor of other currencies, helped by the legalization of the use of hard currencies in January 2009. The dollar was effectively abandoned as an official currency on April 12, 2009 when the Economic Planning Minister Elton Manjama confirmed the suspension of the national currency for at least a year, but exchange rates with the Zimbabwean dollar were maintained for up to a year afterwards. The current government of Zimbabwe said that the Zimbabwean currency should only be reintroduced if the industrial output was 60% or more of its capacity, compared to the April 2009 average of 20%. On January 29, 2014, the Zimbabwe Central Bank announced that the US dollar, South African rand, Botswana pula, UK pound, euro, Australian dollar, Chinese renminbi, Indian rupee and Japanese yen would all be accepted as legal currency within the country. Coins. In 1980, coins were introduced in denominations of 1, 5, 10, 20, 50 cents and $1. The 1-cent coin was struck in bronze, with the others struck in cupro-nickel. In 1989, bronze-plated steel replaced bronze. A $2 coin was introduced in 1997. In 2001, nickel-plated steel replaced cupro-nickel in the 10, 20 and 50 cents and $1, and a bimetallic $5 coin was introduced. Plans by the Reserve Bank of Zimbabwe, for new 5,000 Zimbabwean dollars and 10,000 Zimbabwean dollars coins were announced in June 2005. However, the coins never appeared. All old coins dating from the first dollar were reintroduced at face value to the third dollar in August 2008, effectively increasing their value 10 trillion-fold, and new $10 and $25 coins were introduced. These coins were minted in 2003 but only issued with a redenomination. Banknotes, travelers' checks, and bearer checks. The banknotes of the Zimbabwean dollar were issued by the Reserve Bank of Zimbabwe from 1980 to 2009. Up to 2003 regular banknotes were issued, but as hyperinflation developed from 2003, the Reserve Bank issued short-lived emergency travelers' checks, which were then quickly superseded by time-limited bearer checks, in denominations ranging from $5 to $20 in 2003, then up to $100 by early 2006. On August 1, 2006, new bearer checks with 13 denominations ranging from 1 cent to $100 were issued following the first redenomination of the dollar, superseding the regular banknotes by August 21, 2006 and until August 2008. Bearer checks of $5,000 and $50,000 were issued in March 2007, followed by checks of $200,000 in August 2007. Subsequently, Gideon Gono of the RBZ announced on December 19, 2007 that new bearer checks had been produced and would be released on December 20. Additionally, the current high-value bearer checks would be demonetized as of January 1, 2008. However, due to ongoing problems, plans to demonetize this note were put on hold at the end of December. Since the Zimbabwean dollar was revalued in August 2006, there were repeated discussions and proposals regarding a further revaluation. As early as the beginning of 2007 it appeared that a revaluation was planned with new banknote designs being commissioned. New plans were announced in October 2007. They were initially postponed until 2008 before, in November 2007, the revaluation was described as imminent, and would remove as many as 4 zeros from the currency and would be called Sunrise 2. However, on December 18, 2007, it was reported that a further printing of the current 200,000 Zimbabwean dollars bearer checks had been produced, seemingly instead of revaluing. Further new issues of bearer checks have since taken place. At a press conference on January 16, 2008, Reserve Bank Governor Gono stated that with effect from Friday, the Reserve Bank of Zimbabwe is releasing the following bearer checks into circulation: $1 million, $5 million and $10 million. He continued. Daily cash withdrawals have been increased from the current 50 million Zimbabwean dollars to 500 million Zimbabwean dollars per individual. Less than a month after announcing a similar move, Gono said the new notes would provide much-needed relief to consumers who often have to go shopping with sacks of cash. The Zim Independent and Zim Online reported on April 4, 2008 that $25 and $50 million bearer checks were issued on April 4. The RBZ also increased the maximum withdrawal limit for individuals to $5 billion a day. On May 6, $100 million and $250 million bearer checks were issued and the official exchange rate was floated to counter black market speculation. 10 days later, the RBZ announced that $500 million bearer checks and special aggro checks in the amounts of $5, $25, and $50 billion were to be issued on May 20. On July 14, 2008, Guy Secondarian ceased supplying banknote paper to Fidelity Printers and Refiners, the Zimbabwean government-owned company that printed Zimbabwean currency. Virtually incessant use of the currency printing presses had caused many of the machines to break down, and repair parts were no longer being shipped to Zimbabwe to repair the machines. The Reserve Bank issued the $100 billion aggro check on July 21, which were printed prior to the suspension. On July 30, 2008, the RBZ announced a new currency, effective August 1, 2008, removing 10 zeros from the monetary value, by a factor of 1 to 10. Banknotes in the denominations of $1, $5, $10, $20, $100 and $500 were introduced and replaced bearer checks and aggro checks by December 31, 2008. However, the familiar cycle of printing ever higher denomination notes to keep up with inflation continued despite redenomination. A $1,000 banknote was introduced by the RBZ on September 19, 2008, and 10 days later, as the unofficial exchange rate surpassed 270,000 Zimbabwean dollars to the US dollar, it issued new notes in the denominations of $10,000 and $20,000. A $50,000 banknote was released on October 13, 2008, followed by $100,000, $500,000, and $1 million denominations announced on November 3. The daily cash withdrawal limit was raised for individuals to 500,000 Zimbabwean dollars from 50,000 Zimbabwean dollars, and for select companies it went up to $1 million. Banknotes valued at $10 million, $50 million and $100 million were issued as the withdrawal limit was increased to $100 million per week on December 4, 2008. Scarcely 4 days later, on December 8, the RBZ issued a $200 million banknote, and introduced a $500 million note on December 12, worth approximately $8 at the time. In little over half a year, the billion denomination returned, with the RBZ issuing banknotes of $1 billion, $5 billion, and $10 billion on December 19. Amid the continuing hyperinflation that rendered the currency virtually worthless, spurring the increasing dollarization of the economy, the RBZ issued another set of new notes in denominations of $20 billion and $50 billion to be released January 12. Stepping up another order of magnitude, the Reserve Bank introduced trillion-denominated notes for the first time, unveiling banknotes valued at $10 trillion, $20 trillion, $50 trillion, and $100 trillion on January 16, which was supposed to help citizens still in formal employment to withdraw a full month's worth of salary by showing a corresponding pay slip. As even these notes became increasingly worthless, a media campaign was launched in South Africa using the notes as printing paper. On February 2, 2009, the dollar was revalued once more, this time in the ratio of 1 to 1,012, and new banknotes of the fourth dollar, with 7 denominations from $1 to $500, were issued. These banknotes circulated alongside the third dollar until the abandonment of the dollar on April 12, 2009. Exchange rate history. This table shows a condensed history of the foreign exchange rate of a Zimbabwean dollars to $1, a euro due to the December 2007 banknote shortage. Funds transferred via electronic funds transfer systems bore a premium rate of about $4 million, while the cash transaction rate varied around $2 million. A euro exchange rate was 20 million for large amounts. The third dollar rates above are OMIR. The cash rate differs significantly to the above rates. The table below is the cash rate of the third dollar history, devaluation of the first dollar. The first dollar devalued from $0.6788 to $1 in 1978 to roughly $500,000 per US dollar in 2006, when the currency is revalued. This table shows in more detail the historical value of $1 in Zimbabwean dollars, devaluation of the second dollar. The second dollar started off on August 1, 2006 with an official rate of 250 and a parallel rate of 550 to the US dollar. In July 2008 the dollar was revalued again, this time 10 billion second dollars became January 3 dollar, after the parallel rate reached 500 billion to $1. More detailed data can be found in the table below. Restoration of market data feeds. In the final months before Zimbabwe's central bank reforms of April 30, 2008, virtually all popular currency conversion resources relied upon the official rate of 30,000 Zimbabwean dollars to $1 for published figures, in spite of the vast differences between that and free market rates. By May 23, 2008, Bloomberg and Omda began publishing floating rates based on Zimbabwe's formerly regulated domestic bank market, while Yahoo Finance started using the updated official rate in July, albeit with a decimal point shift of 6 places. Those reported rates generally reflected the official rate as shown in the above table. They soon began to differ, in overvaluation of the Zimbabwean dollar, increasingly substantially in comparison to less regulated markets such as offshore markets or paper cash freely traded on the streets of Harare, reflected above as parallel rates. Devaluation of the third dollar. On August 1, 2008, 10 zeros were removed from the currency, reducing 10 billion Zimbabwean dollars to $1. On October 3, 2008, the Reserve Bank of Zimbabwe suspended temporarily the real-time gross settlement system, halting electronic parallel market transfers, but it was reinstated on November 13, 2008. After being introduced on August 1, 2008, the third dollar continued to devalue. An overview of the exchange rate data can be found in the table below. Devaluation of the fourth dollar. On February 2, 2009, the RBZ removed 12 zeros from the currency, with 1 trillion Zimbabwe dollars being exchanged for one new dollar. Although the dollar was later abandoned on April 12, 2009, exchange rates were maintained at reasonable intervals for some time. See also, hyperinflation in Zimbabwe, banknotes of Zimbabwe, least valued currency unit, economy of Zimbabwe, redenomination, hyperinflation, notes. After the Zimbabwean dollar was suspended indefinitely from April 12, 2009, euro, United States dollar, pound sterling, South African rand and Botswana pula are used as legal tender. The United States dollar has been adopted as the official currency for all government transactions. References. Further reading.